So they say that comparison is the thief of all joy. Comparing yourself to other people is the quickest way to unhappiness. So today we're going to look at how much money the average person has by age. New economic data has just been released from the Federal Reserve, which, if you haven't heard, is also now on social media, including Instagram and Threads.
Hi, I'm Jay Powell. I'm the chair of the Federal Reserve, and I want you to know that the Federal Reserve is now on Instagram and Threads.
That's right, Papa Jerome Powell, Papa Jay is finally here. He's like,
all right, no cap. If this post gets 10,000 comments and 500,000 likes, I'll lower interest rates. If it gets 1 million likes, I'll drop my latest coin, CBDC. What's that? My apologies. Looks like we got rug pulled. Bust out the money printer. Brrr.
So let's start with the net worth. Remember, your net worth is what you have minus what you owe. And what you have can include everything like your cash, liquid investments, stonks, 401ks, IRAs, crypto, Pokemon cards. That counts too, you know, especially if it's used in a video as a taxable write-off. So after you add all that up, you subtract what you owe, which can include mortgage debt, student loan debt, auto loans, credit cards, things like that. Assets minus liabilities equals your net worth. What you'll notice is that the younger you are, the less money it takes to be considered in the top percentiles. And as you get older, it takes a lot more money. So with that set up, let me share with you this super interesting data so that you can do something no one should ever do. Compare yourself to other people. Let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the net worth breakdown. Now, the way to think about this data is not how much money you need to have. I'll show you that later in the video, but how much money the average person has. How much you need to be in the top 50th percentile to be average or the median. And then later in the video, I'll give you a breakdown of the actual assets and what people owe, which is a lot more interesting. But let's start with the basic number first, which is the richest among us. First place is no surprise. It goes to the age bracket of 65 to 74 with a median net worth of $410,000. Now the second place, the runner-up, is 55 to 64 with a median net worth of $364,000 to their name. Third place then goes to 75 and over with a median of $335,000. Now these people are in full retirement. They've been withdrawing from their assets to pay for their lifestyle, which is why they're in third place and not in first place, even though they're the oldest. Now fourth place goes to 45 to 54 with a median of $247,000. Now fun fact, this is the age bracket where you reach the max or the peak earnings potential. This is where your income typically plateaus. Then we have second to last place, which is anyone 35 to 44 with a median net worth of $135,000. And then last place is anyone ages 35 and younger, so pretty much millennials, and there's a huge drop off here because the median net worth is only $39,000. So far the data's pretty straightforward though. The wealthier averages tend to be older, and that makes perfect sense because people that are older bought into real estate a long time ago, they've built in equity, they paid down their debt, their homes appreciated in value, there was time for compound interest for their stonks, so their 401ks and IRAs are also bigger. So far what we can walk away from all of this is that time is the biggest indicator of wealth. The longer you've been alive, the wealthier you will probably be. All right, so now instead of just giving you a final net worth number, I want to give you a detailed breakdown of what people own and how much debt they have. Because a huge portion of a person's net worth can be attributed to their retirement accounts and stocks, which you can find using the sponsor of today's video, Weeble. Weeble is a commission-free trading app that supports stocks, options, ETFs, fractional shares, cash management, IRA accounts, and it's on multiple terminals in app form on the web and on the desktop. And one of the coolest features is that you can easily find a trading idea using Weeble. And here's how. Once you download the Weeble app, all you have to do is go to the market section at the bottom of the app, click that, and then as you scroll down, you'll see something called Market Movers. Now here you can find all sorts of ideas, from the most actively traded stocks, the top gainers, top losers, 52-week highs, dividend stock lists, and more. And if you want to expand on it, just click the Market Movers tab, and here you'll find even more dividend stocks, and it'll show you everything from the dividend yield to the dividends per share, when you'll get paid with the ex-dividend date, the market cap, the PE ratio, and the list goes on and on. Now, after looking at the list, if you like a specific stock, you can just click it and it'll tell you a lot more data. So here are just some of the options like charts, news, feeds, Sage Tracker, analysis tools. So for example, if I click on Sage Tracker, it'll tell me what percentage of this stock is held by institutions. So if I want to follow the big money, I can do that. But if I'm not sure, I can click on analysis and it'll tell me exactly what analysts think of it. In this case, 46% of them say to hold the stock. These are all super useful tools in helping you build your overall net worth. And the best part is that Weeble is giving away 12 free fractional shares once you deposit any dollar amount, each of which can be valued up to $3,000. All you have to do is click the link below in the description of this video. Give it a try, let me know how you like it, and now let's get back to the net worth breakdown. Let's start with the richest demographic, people ages 65 to 74. Now, fun fact, that group of people also makes up about 4% of the people who watch my videos. I don't know why that's relevant or why I brought that up, but to the 4 out of 100 of you watching this video, I want to thank you for spending your very valuable time with me. So people ages 65 to 74 control $474,000 worth of assets, and most of that money can be accounted for thanks to equity in their primary residence. $320,000, which by the way, is not how much equity they have. Instead, it's the estimate of how much people think they could sell their house for at the time of conducting the survey. So what's actually added to their net worth can be calculated by taking that primary residence number and subtracting home secured debt from it. So let me show you. $320,000, which is their primary residence, minus home secured debt of $110,000, and you get $210,000. So $210,000 is the real equity that gets counted towards how much money they are worth. But remember, this is not factual data. This was a survey where people were asked how much their house is worth, and most people think their house is worth more than what they could probably get for it. So it's skewed towards the higher end. Now, their second biggest contributor to wealth is their retirement accounts, which account for $200,000, of which stock holdings make up $160,000. Now, their cars are also worth an average of about $27,000. But now let's talk about their debt. They owe about $110,000 for their house, $16,000 for their car, and on average, they have a $3,500 credit card debt. So overall, it was real estate that made them richer than all the other age brackets. Now moving on to the second wealthiest age bracket, 55 to 64. They typically control $473,000 worth of assets, which is very close to the last age bracket. And the biggest contributor is once again real estate. Their primary residence is worth $350,000, and they have $185,000 in their retirement account, of which stocks made up $111,000. And they typically drive nicer cars than the last age bracket, because their cars are worth about $32,000, which kind of makes sense. The younger you are, the more you care about what car you drive, and as you get older, the less you care about pretty much everything. I can confirm, the only thing I care about nowadays is catching my breath and smashing the like button on Andrei's videos. Now, as far as their debt goes, they owe $125,000 for their house, so slightly more than the previous age, $17,000 for their car, and the exact same average of $3,500 of credit card debt. But they also represent about 6.6% of the people that watch my videos. Now, the next age bracket is 45 to 54, and this is where it gets a little more interesting. This demographic controls $427,000 worth of assets, which is a slightly bigger drop than the last, but they have the biggest representation of real estate, making up $380,000. So people in this age bracket tend to own the nicer things, including the nicer houses. They also have $115,000 in retirement accounts, of which stocks made up $68,000. And they also drive the nicest cars, slightly higher than the previous bracket at $32,100. And this makes perfect sense because in your 40s and 50s, you've hit your peak earnings years. So you're gonna make more money in that part of your life than any other, so it makes sense why you drive the nicest cars and live in the nicest houses, because lifestyle inflation. Gotta impress those fellow executive friends. Life makes sense again. Now their biggest debt though is also their house at $190,000, $16,000 for their car loans, which is in line with everyone else, and a slightly lower credit card balance of $3,000. Now I'm gonna skip the next age bracket of 75 and over because I think I covered it with 65 to 74, but I will say that they have the third highest net worth and the lowest levels of debt across all the other ages, especially as it relates to housing. Now let's get down to some core demographics. 35 to 44. This age bracket makes up about a third of the people who watch my videos, and I'm also pretty much in this age range as well. Now what you'll notice here that's interesting is that even though the median net worth of this age bracket is $135,000, they control $310,000 worth of assets, which kind of shows you that it's skewed so much lower just because when you're younger, you haven't had the time to pay off your debt just yet. Now, of those numbers, the primary residence is worth a median of $350,000. Their retirement accounts are at $45,000, of which stock holdings made up the majority at $30,000. The leftover $14,999 is CDs, bonds, and crypto, and the leftover dollar is NFTs. They also drive a car that's on average worth $29,800, so also kind of on the higher end. But as far as their debt goes, it's also kind of no surprise. Primary residences make up most of their debt at $190,000. Their car loans are in line with everyone else at $16,000. But installment loans or student loans are surprisingly not the highest, $25,000. And credit card debt is about in line with everyone else at $2,900. Now the last age bracket is 35 and younger, which is the one that most people have probably been waiting for. Because altogether, that's about 46% of the people that watch my videos. So here's where most people are at. So the median 35-year-old or younger controls $71,000 worth of assets. Their primary residence is worth roughly $250,000. The median retirement account size is about $19,000, with the average car value at $24,000, which is the second lowest out of all the age groups, right behind 75 and over. Now here's how all their debt compares. The median debt level is $177,000 for a house, $14,000 for their cars, $18,000 for student loans, which is the lowest of all the age brackets, and $1,700 in credit card debt, same as 75 and over. So that's a lot of numbers that I just threw at you, but hopefully it gives you a generic idea of where people are at today. But now let me sort of tie it all together. So there's two main things that made people richer, and that was time and real estate. But there was also a third one that kind of surprised me, which is a college degree. For example, they found that a family with at least a college degree is gonna make roughly 2 times more than those with just some college experience, and almost 4 times more than those without a high school diploma. Now, I think we could have all probably guessed that, sure, if you have a college degree, you'll probably have a higher income. But if you make that same assumption about their net worth, you'd be wrong, because the gap is so much bigger. A family with a college degree, for example, versus no high school diploma has a higher net worth by a factor of over 10 times, and over 3 times higher than people with some college experience. So even though the income side can be twice as big, when it comes to the net worth, it can be 10 times higher, which is kind of crazy to think about. So now that you've seen how much money people have, let's talk about how much you should save. And this is according to Fidelity, and let me know what your thoughts are on this, because I think this is really, really hard to do, especially considering all the inflation that we've been through, but let me know your thoughts. And this makes a couple assumptions. First, it assumes that you start at age 25 and you start saving 15% of your income and you invest it towards the stock market. So by the age of 30, they say that you should have saved at least 1 times your annual salary. So if you make $50K a year, by year 30, you should have at least $50,000 in some retirement account that's hopefully tax efficient. And then every 5 years after, it increases by 1. So by 35, twice your income, by age 40, 3 times your annual income, and so on and so forth until 67, where it jumps to 10 times your annual income. So that's apparently what you're supposed to have according to Fidelity. I'm skeptical. I think it's really hard for the middle class to do after all the government spending and all the stimulus, but hopefully if you're watching videos like these about investing, you're doing better than the average. Now, if you feel like you're behind after watching this entire video, please remember it is never too late to start investing, especially if you want to get started with low-cost broad market index funds, the slow and steady way to get rich. Remember, you can grab your free stocks, links are down below, but more importantly, I'd love to know how this data that I shared with you compares to your personal situation. And I realize most people are not gonna leave a comment in the YouTube section, but if you do, and you wanna share with me your age range and maybe your net worth, maybe we can figure this out together, because remember, this data is not fact. It was just a survey, and they could have had a sample size that wasn't representative of the average, but I'd love to know. Either way, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Remember, once again, you can grab your free stocks. Links are down below. Go track them automatically with the spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. We'd love to see you back here on Monday, Friday, sometimes a Wednesday. See you soon. Bye-bye.